We absolutely warned you what would happen if the initiatives failed last week, that it was going to embolden the party in power to continue to push through new taxes, to continue to do the things that have really been detrimental to our state. And now that the effort to repeal the capital gains tax has failed, our predictions are coming true. This segment is brought to you in partnership with our friends over at Future 42. Turn your frustration into action at future42.org. It took one day, after it became clear that the initiative to repeal the statewide tax on capital gains was going to fail, for Seattle City Councilwoman Cathy Moore to say that she is going to propose what? A tax on capital gains for the city of Seattle. Because now they're unencumbered, unburdened by what has been. And now they're looking at it like, okay, they see that despite the fact that the initiative was worded in a very confusing manner and that there were a lot of lies peddled about the tax on capital gains, and the media didn't really cover what the tax on capital gains will turn into, which is ultimately an income tax on all of us, not the very wealthy. But they see this as a mandate now, like, oh, Washington voters must really, really want more taxes on the quote unquote wealthy. So Councilwoman Cathy Moore sent out a proposal. She said, my priorities in the budget. This week, I'll be sharing my thoughts about the city budget. My top priorities are affordable housing, human services, homelessness, and public safety. They continue to be of critical importance for District 5 neighborhoods and Seattle as a whole. On the revenue front, she said, I will be proposing a local capital gains excise tax, which of course they call it an excise tax because our state was able to get the state Supreme Court to call it an excise tax, even though it is in every other state in the union and the IRS an income tax. But if they called it an income tax, that would be against the state constitution. So she says, I'll be proposing a local capital gains excise tax with funding dedicated to rental assistance for rent-burdened households, down payment assistance for low and middle income home ownership, and food assistance to food insecure households. My proposal is identical to the state legislation that was just widely reaffirmed by voters in the general election, with the exception that it's a 2% tax versus the 7% state tax on capital gains on stocks and bond profits over $250,000. So if you are someone who has done well, who works in tech, happens to have the unfortunate privilege of living in the city of Seattle, is trying to build a business here that you would eventually sell, you are not only going to have to pay the state tax on capital gains, but you are going to have to pay a tax to the city of Seattle to the tune of 2% for the sale of stocks and bonds and other assets, or over $250,000. And they're going to use that money and they're going to put it into things that we know don't work and that we know are a bad idea. For instance, down payment assistance to low and middle income homeownership, something that Kamala Harris proposed on the presidential trail. And what is that going to do? Well, that's going to just drive up the cost of owning a home and buying a home for everyone. The rental assistance for rent-burdened households, well, they're already wasting tens of millions of dollars propping up people who should be evicted from their rental units. People like, this is an example in King County, the squatter in Jaskaran Singh's rental house in Bellevue that's been living there for 2.5 years now, hasn't paid rent, and he keeps getting bailed out by taxpayers. So of course he's not going to pay rent because we're paying rent for him. So if you could get someone else to pay rent for you, why would you pay rent? So this is going to be, if it passes, disastrous to the already struggling business environment in the city of Seattle. I do not know why Seattle businesses continue to sort of waffle on policies like this or not come out and take a more hard approach to defeating them. For instance, when the city of Seattle went during the middle of the pandemic, during the middle of the riots in 2020 and passed another version of, it was a tax on high-paying jobs, Amazon didn't even fight or push back. They just started moving jobs to Bellevue. And I'll say of Amazon as well, you know, Amazon, for instance, supported or was against the initiative to repeal the Climate Commitment Act because, you know, they have Climate Pledge Arena. Make no mistake, that was really just about kowtowing to progressives and saying, look how woke we are as a company, hoping that one day the progressives will embrace Amazon as a good, you know, corporate partner. They're never going to do that. Like, I do not know why these large corporations continue to try to cozy up to progressives that despise them and that want to scare them out of town and don't mind if they pick up shop and leave and don't think they're a net good for the city. And they're going to turn around and this impacts Amazon and its employees. You think Amazon is going to be able to continue to recruit good, like, competitive tech workers to Seattle if there is a statewide tax on capital gains and then a Seattle tax on capital gains, like when a lot of their pay is through stocks? Of course not. has a huge detrimental impact. So we told you, I mean, this was about stopping what the capital gains tax will become. That's what it was always about. And it's what the media didn't do a good enough job warning people about. You know, there's already been an effort, and I would say we'll probably see it again this legislative session, to lower the threshold on capital gains to being taxed 7% on $250,000 to $15,000. So really, 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 really rich. And it's like, oh, we're not getting enough money from the really, 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 really rich because people like Jeff Bezos just picked up and they moved to Florida and then they sold their stocks there. So now we've got to lower the threshold. So everybody who sells stocks or bonds or other assets and makes over $15,000 a year is going to have to pay us. And then they're going to eventually make sure it applies to the sale of your primary home. We talked about this. And so if you've got a nice nest egg in your home and that's going to be the way that you fund your retirement, well, you're screwed because the state's going to take a big chunk of it. So you better start planning for that now. Because we warned you. I hate to say I told you so, but we did tell you so. It took a day for the city of Seattle to say, we're going to do that too. And you don't think other local entities around the state are going to do that as well, saying, oh, capital gains, it withstood the initiative, so now we're going to pass a capital gains excise tax. And we're going to absolutely scare away entrepreneurs, discourage business growth, discourage success, scare away tech workers. And we're going to think that that's going to make us a better, stronger, safer city. And it's not. It's just not. So we told you so, and I think that I'm going to continue to have examples of we told you so on the tax on capital gains as time goes on. That segment was brought to you in partnership with our friends over at Future 42. Turn your frustration into action at future42.org.